Tuesday, 1st of August 2023, we're looking at the yen index and Asian range break opportunities. So the first signal we get is this close, which occurs at 625, and it's a break of the Asian range to the upside. Okay, so that means we're looking to buy the yen or short one of the yen crosses. Now, the first thing to note about this is not the most clear and obvious break because of the wick. So that alone, you might want to just watch and wait and see what happens. So if this occurred, you could either go look directly for an entry, or you wait for the next candle to print, and hopefully that is an obvious up candle, which gives you stronger confirmation. In this case, you'll see that the candles following this, you had a big wick, another big wick, and then it starts to reverse. So the picture becomes unclear around here. Okay, so most conservative thing to do just be to sit out and possibly start looking for an Asian range fake. So we're going to go through all the different scenarios. So scenario number one is like we get the close above the Asian range, therefore I'm going to look for an appropriate setup on one of the crosses. So what's an appropriate setup? I want to see the Asian range low being broken on one of the yen crosses. So this is pound yen, and you'll see at the same time we're nowhere near the Asian range low. Okay, so there's nothing to look at there if we are looking to sell the pound yen. Okay, so if we're looking to sell the pound yen, we'd want to see either price come down here, or possibly it's already made its liquidity sweep. So these Asian highs, double top Asian high, if they were getting taken out and price was coming back in, even that may be interesting for a pound yen short. But as this stands, price is in the middle, so there's no setup opportunity on the pound yen. Similarly on the euro yen, the euro yen, actually this is the better trade of the two. Why? Because so far we're working on the idea, this is what we're seeing, okay? That's all the information we have on the yen. So we're assuming that yen is going to get stronger based on the fact that it's broken its Asian high, and we're hoping for a continuation to the upside. What's happened on the yen, exactly at London Open, we've had like a potential Asian range fake trade, so we could have looked to take that down, but even that's probably not the best setup. What I would have preferred to seen is some kind of an Asian high here, and then at London Open that high gets taken out and then it moves. As it stands, like if you took it from, so this, we get the signal at 625, okay, that's the 625 close. 625 puts us somewhere, puts us here. Okay, so it's not really, the move's already kind of half happened. Probably in that case what you'd want to do is fib this up and look for a premium fair value gap somewhere around here, which never gets tapped, so there's no entry. On the Aussie yen, however, we have the perfect setup. Why? Yen index has broken its Asian range high, therefore we want to be selling the Aussie yen. What's happening on the Aussie yen at 625? We've already had the break to the downside. Okay, it's already moved, so we're down here, we're at the close here, so we're a bit late for it. And if you were waiting for a premium, you never got the premium. If you're waiting for a tap back to Asian range high, you also never got that. So you probably wouldn't, I don't think you would have got the entry, because the most sensible place, you don't want to chase price, the most sensible place, or the least acceptable, like the minimum standard you should want for the entry, would be a tap back to this Asian range low. So you don't get any of the trades. Okay, moving on. So we said price becomes unclear around here. Anything could happen. This looks like it's possibly be an Asian range fake. Then price comes back into the Asian range, but it's a wick. Then you get another wick candle, and then this one happens here. So let's say, for argument's sake, we're looking for yen shorts here, based on the fact that we have an Asian range fake. So I'm either looking to long pound yen, long euro yen, or long Aussie yen at the close of the 655 candle. So 655 puts us here. There's nothing special happening. Possibly an argument for like a tap back to midnight open. Could have got that, but yeah, it's not a great trade. So with the Asian range break, you're really looking for clean interactions with Asian range high and Asian range low. So there's that, and then you get this one, close of the 655. You're looking to buy. We haven't had the tap back to the New York, so again, that's not particularly clean, and there's not really a clean buy setup in here either. So far you've had two potential signals and you never got your entry. However, the next signal comes here. It's the 7 o'clock candle. Okay, we're already overall bullish the yen for the session. Okay, not overall like on an hourly or a 4 hourly. Remember, these Asian range breaks, you're only really looking for one-to-ones, like 20 pips. If you're lucky, you'll get 30 or a bit more. So based on this, we can look for a long on the yen, 7 o'clock close. So that means we're looking to short pound yen, 7 o'clock. So we get the move down, but it's not really a good entry here. In hindsight, you get that liquidity take, but that's an hour later. Okay, so it's not really a good setup. Yeah, euro yen buys, possibly on a, sorry, euro yen sells. You don't really get, maybe there, but that's nearly an hour later. So there's no Aussie yen sell at the 7 o'clock is actually the best setup of the lot. Why? Because previously we said that the minimum we're willing to accept is a tap back to here, but once the 7 o'clock opens, that's all the London volume coming in. Okay, and this is quite a clear intent to move upwards on the yen and on the Aussie. So this is our new range that we're dealing with, high and low here. So we get this movement down in the first 5 minutes. This can now be our stop loss here. So any kind of tap back into here with a, call it a 10 pip stop loss, would have worked out. Okay, and it turns into a good trade. Okay, so just to recap, what we're looking for on the Asian range break is a break of the range. So for example, on the yen, if we get a break of the range to the upside, our preferred scenario and setup would be a break of range on the crosses to the downside, which we didn't get. We got this on the Aussie, but we never had the tap back. Short of that, the next entry comes here. Okay, so this is still technically an Asian range break, but you have to take into consideration the timing. It's the 7 o'clock open, so now you have a different scenario. Now you're actually looking for, it's the silver bullet hour. So any type of silver bullet setup, you could have been looking for that. So for example, on the pound, we get this immediate move down. Okay, and then it depends on where you, this is where the discretion comes in. Where do you draw your range for the OT, for the optimal trade entry? So if that was your range from high to low on a 1 minute, you could have started looking for shorts at any type of premium here. So for example, when this 1 minute liquidity gets taken out, it wasn't easy to catch though. I mean, let's say you entered here with your stop above there. In the end, it was a good trade. You could have got a 2-to-1 on that pound yen. But remember, this is no longer an Asian range break trade. This is more like a silver bullet or an OTE retracement in the London session. On the euro yen, similar kind of setup. So that's your high and low, that's your range on the 1 minute, and you'll see price just about comes into that premium there, into this fair value gap. So you possibly could have got that, but it was quite difficult.